Welcome back to the Farm Show on Westplex Talk 1045. We are in C Block, and today C Block stands for Corteva. Last week in C Block, our third segment of the show, we went through Bayer's earnings call and earnings report, talking a little bit about big picture ag issues and the specifics that would affect farmers here in our 4-county broadcast area. Today, we'll do the same with Corteva. Now, this call actually took place a little more than 2 weeks ago, the same week that Bayer had their earnings call. Before we begin, remember, this is not financial advice. This is never financial advice. And I would suggest you check out Corteva's website to see their full disclaimer about the statements they'll make on their earnings call. We will focus on the particulars of what might affect your farm and what might be coming to your farm in the future, and not so much on the financial details like EBITDA, margins, or too much about currency headwinds and such. Okay, let's get into it. The call started with Chuck Magro, CEO of Corteva, giving prepared remarks. Here's the big picture overview where Chuck references the company dividing up into two distinct companies.
Before we get into our solid third quarter results, I'd like to address our October 1st announcement on our intent to separate into two public companies. This proactive strategic decision is rooted in our belief that separating our seed and crop protection businesses now allows both to be better positioned to achieve their maximum long-term growth potential in the future. Bringing these businesses together 6 years ago was undoubtedly the right thing to do, as demonstrated by our strong track record, including this most recent quarter. We have clearly been among the market leaders, but we have an obligation to look ahead, past the short term, and ensure both companies are able to pursue their distinct opportunities to the fullest extent. So it's not that we believe things aren't going well today, they are. It's that we believe things could be even better in the future as two separate companies. It's really that straightforward. As we said last month, the seed genetics landscape is changing due to new technologies like gene editing and artificial intelligence, which opens new markets and opportunities for companies with scalable ag science capabilities. At the same time, rising pest and disease pressures and changing weather patterns have driven a shift from single to multiple modes of action in crop protection, including biological solutions. As a result, the market has gradually transitioned away from integrated proprietary models to more open source licensing, with collaborations now driving innovation success. As a result, industry players are increasingly open to working together, which also allows them to share resources and reduce risk. And importantly, it allows us to get affordable top technologies into the hands of farmers. So we are looking ahead with excitement and optimism, comforted by the fact that both of these businesses are leaders in their markets today and will remain so in the future. It's early days, but the process remains on schedule for a second half 2026 separation. Our board has initiated a global CEO search for new Corteva, and we will provide updates on the separation along the way. But our goal right now is to deliver a strong 2025 and 2026.
Continuing on with prepared remarks, Chuck took a big picture look at the farm economy.
From an industry perspective, the overall ag market fundamentals remain mixed. We're still seeing record demand for food and fuel, and major crop inventories are within normal ranges despite large crops in Brazil and North America. Farmers continue to prioritize top-tier seed technologies while managing tighter margins. In the crop protection market, although we continue to experience competitive pricing dynamics in some major markets, underlying farmer demand in terms of applications remain on track with historical levels. In other words, when farmers have crop problems, they spray with the best solution they can find.
Then Chuck went into what he expects from the upcoming year.
Now, let's move to the first look at how we're thinking about 2026. From a macro perspective, we're anticipating a continuation of record demand for grains, oilseeds, meat, and biofuels. On-farm demand is expected to remain steady, and farmers will continue to prioritize top-tier technologies in order to maximize their yields. A farmer's seed selection is particularly critical and is non-discretionary when compared to other crop inputs. Given the high corn area in the U.S. this year, it's logical to assume we'll see a couple million acres shift back to soybeans in 2026. With the overhang of global trade uncertainty, it would be premature to discuss how large a shift might be, but we do not consider it to be disruptive to our planning assumptions given our market-leading position on both crops now. Global trade discussions remain dynamic. However, last week, China committed to buying 12 million metric tons of soybeans this season, followed by at least 25 million metric tons per year for the next 3 years. We will continue to monitor the situation, but this should be welcome news for U.S. farmers. Perhaps most notable is that we are now expecting low single-digit growth in the crop protection industry, including high single-digit growth in biologicals. This would be a good first step in the overall return to a healthy CP market. With the exception of Latin America, where we expect competitive pressure to keep prices flat to modestly down, we see overall CP market pricing stabilizing in 2026. Turning back to Corteva, what continues to set us apart is the strength of our portfolio, the continued focus on execution, and increased investment in innovation. The introduction of hundreds of new products is expected to continue to drive solid returns for farmers, and thus a premium in the market, and contribute to our volume growth. We're also expecting a continuation of sizable productivity benefits in both businesses, a defining characteristic of our margin enhancement journey.
If this is your first time listening to The Farm Show here on Westplex Talk 104.5 FM, welcome. You'll note that every time we talk about earnings calls, I point out the fact that the prepared remarks are usually pretty thorough, and they're well researched, and they're well vetted by the legal team and, of course, the investor relations team. But the really good stuff comes in the Q&A. And we got several great questions on the Corteva conference call. Vincent Stephen Andrews from Morgan Stanley asked about the crop protection portfolio. Here's what Chuck had to say.
We like our portfolio a lot. We've invested in it heavily. I think if you look at what's been coming into the market with our new products, Rinskor, RLX, Reclamel, these are all new actives within the last few years or so. And then the new products that we're bringing into the market in the late this decade, early next decade. But look, we're always looking at partnering with other companies, whether that's full M&A or collaborations or R&D relationships in terms of joint ventures, because I think that more is needed in the industry. And I've said that many times, that this is an industry that needs to work together because, look, we've got real issues when it comes to disease and insect resistance in terms of what we're seeing around the world. And it is getting more expensive to bring new actives into the marketplace. So collaborations help everyone. They help each company, and they actually help the farmer in terms of bringing affordable next generation technology to the marketplace. So we would be open, but that's not because we don't like our portfolio. In fact, we think that our portfolio, as I've mentioned already this morning, is quite strong.
David Begleiter from Deutsche Bank asked about the biologicals portfolio. And here's what Chuck had to say.
First of all, I'd say we're very pleased with the growth and the progress in biologicals. When we first entered the market and when we did the M&A, we were in that neighborhood of about $400 million of revenue. And I think this year it's going to get closer to $600 million of revenue. So a very strong growth considering the overall market backdrop in crop protection. The other thing that we're very pleased with is that some of these products now are moving nicely around the world. And we've just launched the biologicals business in a branded way in North America. And this spring was the first year that we've done that. And we're seeing really good success, I think, for U.S. farmers trying this new technology. And then also progress with some new technology actually going into Brazil and in Europe. So I think it takes a little bit of time to move these products around the world. And that probably is some of the reason why we've seen the growth rates the way they are. But overall, I'd say we're very pleased with our biologicals performance what farmers are seeing on the field and how we're moving these products around the world. So we would expect to see next year continued, strong, high single, low double-digit growth rates in biologicals for the foreseeable future.
And now we're getting into some really good stuff. Duffy Fisher from Goldman Sachs asked about market share. Chuck kicked that answer over to Judd O'Connor. Judd is the EVP of the seed business unit, and he offered some color commentary.
So from a market share perspective, we do feel very confident that we were able to pick up some share. At the same time, we held price mainly through mix here in corn, did that across brands, and feel very good about our product performance going into 26. On soy, we picked up even more share than we believe we did in corn. We need to finalize all this yet with acres, but directionally, we're very confident that we've had a strong year, and it's really based on our germplasm and the performance of our products.
If you're just joining us, we're going through executive commentary from the Corteva earnings call 2 weeks ago. The next question from analysts came from Alexei Yefremov from KeyBank Capital Markets, and he asked about differentiated crop protection products versus generics. Here's what Robert King, the EVP for the crop protection business, had to say.
The portfolio, as you know, we started in 2022, beginning to work on getting it to where we are today with about 2/3 of it differentiated. And that does drive a premium in the market, and it's higher technology that's adding value to the farmers. The balance of that is what we call not differentiated, but that doesn't mean it's commodity generic. It is still a formulated product that is normally in the price ladder, brand ladder type of setup, to where it's sometimes a lower price point, not the premium product, but it still is bringing value on the farm. So our overall scheme for our portfolio and how we shape it is we don't intend to play in the commodity generic type molecules. We want to play in that upper end, because as an innovation company, that's how we fit into this overall agricultural economy. So I'll leave it at there. I hope that helps a little bit.
Next up, with a super hot topic, was Matthew Dio from Bank of America Securities. He asked about gene editing. Here's what Chuck Magro had to say.
So looking 15 years out, for me is very exciting when it comes to this technology. In fact, we put a slide in the appendix of our first gene-edited corn hybrid, which we call a disease super locus, on slide 29. I'd encourage you all to have a look at it. This is just scratching the surface, I think, on the full power of the technology. But we do not think that it will become a disruptive technology beyond sort of what can be done inside of the lab. What do I mean by that? If you look at what is going to be needed to be successful, the gene editing capability, we believe, will be readily available. In fact, we license our gene editing tools to many companies around the world, and we encourage that kind of competition. It is important from an innovation perspective. I think where the differentiation will be on the germplasm, because you need something great to edit. And so the capability to gene edit plus the germplasm, plus if you think about how we go to market around the world, we have to be able to produce seed in every region around the planet where we're going to sell. And that capability is really expensive and very difficult. And so when you start thinking about this, where I think that this leads is that there could be great new technology that's being invented, and we really hope that there is. But then what it'll lead to is probably more partnerships because of access to germplasm, and then just the sheer supply chain production capability that's going to be required. But it is going to be, I think, a very powerful technology in the future, and I think it will transform how farmers actually farm and what we're able to do to help farmers.
Okay, now we're getting to a part of the call where Corteva can pound their chest a little bit. They talked earlier on about their industry-leading position in both corn and soy, but they might also take the lead in a third major crop, Tell us about it, Chuck.
So as you know, we're pretty excited about our hybrid wheat technology. And the way I think about this is this could certainly be the third leg to our stool. We're already market leaders in corn and soybeans, and if you add wheat over the next decade or so, it's a pretty powerful combination. We have said that we believe this is a $1 billion revenue opportunity in the next decade. So this is kind of the year 3 of our plant trials. I'd say all systems go for a launch in 2027. We're seeing consistently a 10 to 15% yield improvement, which will be really exciting for farmers. And don't forget that the first hybrids we put into the market will probably be the worst ones we put into the market because they're coming first into the pipeline. So what I'd say is that there'll be, I think, small amounts of availability in 2027 ramping up. But as we get out to the middle of next decade, we think that this will have a similar margin profile as corn and soybeans for us. So pretty exciting for us, a yield improvement for farmers overall. And this is an important crop, right? It's the largest row crop in the world, and it still accounts for 20% of the calories we consume. So very important for society when it comes to food security.
Well, that's pretty exciting for the Corteva folks. Imagine 10 years down the road, they're the leader in 3 major crops. And if you recall, we've heard from previous Corteva discussion that they might just start playing more heavily in the cotton market as well. Now, there's one more hot topic that was addressed on the call, and it came in a question from Benjamin Thurer from Barclays, and it was about M&A and the biological space. Here's what Chuck had to say.
Yeah, very good question. So this is an area where I think we have been active over the last couple of years in terms of M&A. The biologicals industry just as a whole is more fragmented, and there are smaller companies doing really great things. It could be that we would get more active from an M&A perspective and just outright acquire them, or it could be either commercial or R&D collaborations, because we already do a lot of that through our R&D and our commercial organization. So all of those options are on the table. I would suspect that as the company separates, they will even be more focused on growing their biologicals portfolio because it's been such an important part of that business that I think you're going to see all of these things kind of accelerate over time, M&A and technological and commercial partnerships.
And we're going to have to leave it there for now. If you want to hear the full call or even just read the transcript, go to investors.corteva.com. That's all the time we have for this week. Join us back here on Westplex Talk 104.5 FM in 2 weeks. That's December 6th, 2025, right here at 10 a.m. on The Farm Show. We hope you have a wonderful and gratitude-filled Thanksgiving. We'll see you in 2 weeks.